Hey friends, welcome back to the channel. I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth right here in Singapore. Today we're putting a specific SGX listed company under the microscope for a deep dive analysis. The investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers with over 950,000 reads and 57,000 likes. I've produced over 800 videos with more than 380,000 watch hours as of May 2025. I also focus on regional and global economic trends. If you're serious about uncovering the hidden gems and potential pitfalls in the Singapore market, you'll want to hear this and consider how our daily premium insights can give you an even sharper edge. Today we're dissecting Singapore Airlines, and here's the question every investor is asking. Is SIA still the premium investment it once was, or has it become just another airline struggling with post-pandemic realities? Most people see SIA as Singapore's crown jewel, but the numbers tell a more complex story. We'll examine 3 compelling reasons why SIA might deserve a spot in your portfolio, 3 serious red flags that could derail your returns, and finally, my personal rating and strategy for this aviation giant. Let's start with the good news. First, SIA has demonstrated remarkable revenue resilience with record-breaking top-line performance. The airline just posted record group revenue of 9.54 billion Singapore dollars for fiscal year 2025, up 2.8% from the previous year. This isn't just recovery, this is growth beyond pre-pandemic levels. The company carried a record 39.4 million passengers, up 8.1% from the previous year. For Singaporean investors, this translates to a company that's not just surviving, but thriving in challenging conditions. The passenger business generated $15.85 billion in revenue, showing the strength of their core operations. For Singapore, second, SIA's strategic positioning and brand value remain formidable competitive advantages. The airline's network expansion continues to impress, with strong performance across key routes. Think about it. India's middle class is exploding, and SIA now has a front row seat to capitalize on this growth through their strategic investment. Third, SIA's operational efficiency shows in their ability to maintain strong load factors despite capacity expansion. Singapore Airlines achieved a passenger load factor of 86.1% for the full year, while their budget subsidiary Scoot maintained an impressive 88.4% load factor. The company expanded capacity by 8.2%, while passenger traffic grew 6.4%, showing disciplined capacity management in a competitive environment. Our premium members get detailed analysis of how these operational metrics translate to long-term profitability, insights that can help you time your entry and exit points perfectly. Now let's talk about the challenges that could impact your investment returns. First, intensifying competition is absolutely crushing profit margins across the industry. SIA's operating profit plummeted 37.3% to $1.71 billion despite higher revenues. This is a massive red flag that shows how competitive pressure is eating into profitability. Passenger yields fell 5.5% as competitors flooded the market with capacity. This isn't a temporary blip, it's the new reality. Airlines are fighting for market share, and that means lower ticket prices and squeezed margins. Second, the company faces significant cost pressures that are eating into profitability. Total expenditure jumped 9.5% to $17.83 billion, while revenue only grew 2.8%. Non-fuel expenditure alone increased by 11% to $12.45 billion. Rising labor costs, maintenance expenses, and airport fees are structural challenges that won't disappear. Net fuel costs increased 6.1% to $5.39 billion, showing how volatile energy prices continue to pressure margins. When you're building a long-term portfolio for your CPF or SRS investments, these cost pressures represent real risks to your returns. Third, the underlying profitability story is more concerning than the headline numbers suggest. While SIA reported a record net profit of $2.78 billion, this was heavily boosted by the $1.1 billion one-off gain from the Air India Vistara merger. Strip out this one-time item, and the underlying operational performance shows significant pressure. The 37.3% decline in operating profit tells the real story of how the business is performing in its core operations. For investors focused on sustainable earnings growth, this creates a challenging environment for capital appreciation. Here's my personal take on Singapore Airlines. This is a high-quality company with strong fundamentals, but it's facing headwinds that cannot be ignored. The brand strength and operational efficiency are genuine competitive advantages, but the industry dynamics are working against profitability. The record revenue growth shows resilience, but the massive decline in operating profit reveals the underlying challenges. My rating for SEA is a cautious hold with a slight lean toward accumulation on significant dips. For Singaporean investors, here's my strategy advice. If you're building a dividend-focused portfolio for steady income, SIA offers attractive returns with a total dividend of 40 cents per share for fiscal 2025, comprising a 10 cents interim dividend already paid and a proposed 30 cents final dividend. This represents a total dividend distribution of $1.2 billion for the year. For growth-oriented investors, I'd wait for a better entry point, perhaps if the stock drops below current levels given the earnings headwinds. If you're investing through your CPF or SRS, consider SIA as a small allocation within a diversified portfolio, not as a core holding. The aviation sector is simply too volatile for heavy concentration, especially with the current margin pressure trends. The final dividend of 30 cents per share will be paid on August 27, 2025, for shareholders as of August 11, 2025, subject to approval at the annual general meeting on July 25, 2025. This provides some near-term income certainty for dividend-focused investors. So we've broken down Singapore Airlines piece by piece, looking at its strengths and weaknesses, and I've given you my personal verdict and strategy advice. Now, if you found this level of in-depth, actionable analysis truly valuable and want to seriously level up your investing game right here in Singapore, imagine getting daily premium insights delivered to you up to a week before anyone else sees them. That's what our members get for just $1 a month, less than a cup of coffee. You'll unlock a wealth of additional content, including daily market analysis, early insights into promising trends, and even deeper dives into specific investment strategies relevant to Singaporean investors directly from my desk. Think of it as your consistent, daily dose of financial fuel for smarter decisions. Ready to join the inner circle? Just click the link in the description below to become a member.